welcome to the first ever episode of CreditGauge Live. I'm Jeff Richardson, Senior Vice President of Marketing at VantageScore, and I'm coming to you live high atop Midtown Manhattan at the VantageScore New York City offices. So I know what you're thinking. What is CreditGauge Live? CreditGauge Live is going to be the first ever monthly report on consumer credit health trends based on the CreditGauge report, which has been in the marketplace for a number of years now. Every month, I'll be coming to you live with special guests and our industry experts to talk about the latest in consumer credit trends, to keep you ahead of the curve and in the know as it relates to consumer credit. The big headline this month is that balances are up, utilizations are down. Seems a little counterintuitive, but luckily I'm joined by Susan Fahy and Atif Mirza, our lead analysts for CreditGauge. So let's start with you, Susan. How are consumers doing with their credit as we begin the year?
Thanks, Jeff. So heading into 2025, consumer spending is really a mixed picture. What we saw throughout 2024 is consumers continue to spend, and on the surface, that seems like a positive story. But when we dig a little deeper, what we find is that their spending really just kept in line with inflation. And so what that tells us is that consumers are leveraging credit as they enter this year to buy necessities rather than discretionary items.
Notwithstanding that, there was some considerable holiday spending. Tiff, can you give us an update on some of the credit card trends you're seeing?
So according to latest CreditGauge, December 2024 data shows that even though overall credit delinquencies were up, credit card delinquencies actually improved year over year. And what we see in December 2024 data is that the early stage credit card delinquencies improved 0.6%, and mid stage and late stage delinquencies actually plateaued. Meanwhile, overall credit card balances, they rose to approximately 6,500, which is just in line with 2.9% inflation rate of 2024. So this suggests that consumers were credit cautious. They curbed their spending on discretionary items, especially facing the headwinds of high inflation rate and cooling labor market.
Thanks, Atif. So you mentioned credit card balances. Susan, I'm curious, kind of overall, when we look across products, how are consumers and their balances trending as we begin the year?
What we saw in December is overall credit balances actually slowed compared to November, and overall includes 4 different products. So it's credit card, mortgages, auto loans, and personal loans. So those balances at a high level slowed towards the end of the year, and that was driven mainly by mortgages. So consumers were paying down their mortgage debt and not moving in or purchasing new homes. So what that shows us is that as consumers were using less available credit, their balance to loan ratio actually slowed as well.
Thank you, Susan. Atif, really important insights, and we'll be tracking them. Looking forward to your insights next month. Next up, we'll be bringing in a special guest, as we will do every month on CreditGauge Live. And this month, we'll bring in Dr. Rikard Bandebo, VantageScore's Chief Economist and Chief Strategy Officer. Rikard will join me to talk a little bit about what he's seeing in the consumer credit files and provide some of his macroeconomic forecasts. We'll be right back. Welcome back to CreditGauge Live. I'm joined by Dr. Rikard Bandebo, VantageScore's Chief Economist. And so, Rikard, you and I, we visit with fintech leaders and bank executives on a regular basis. And one of the things that we're hearing is some concerns that there may be blind spots in the credit files. What's your take on those points?
Well, let me just start by saying that the research is pretty clear that still the single best source of information on the consumer's creditworthiness is the credit file. But as you point out, we've been having a lot of discussion with lenders, and there is one area which is on a lot of their attentions right now, and that's student loans. Student loan delinquencies haven't been reported on the credit file for almost 5 years. And starting this month, they're beginning to appear again. So hence the interest. Now, just to give some perspective, that's over $1.5 trillion of outstanding debt on student loans in the US. So it's not a small amount. On top of that, what lenders are really trying to understand is how many of these student loan borrowers are going to struggle with these repayments, and how is that going to impact their payments on other loan products and credit cards. And from the borrower's perspective, this is also really important because those student loan borrowers who have good credit histories, if they miss a payment on their student loans, they're going to see their credit scores go down by over 100 points.
So, Rikard, from a lender's perspective, where else might they look for data to kind of help fill in some of these gaps?
So what we're seeing is there's some great alternative sources, such as open banking data and consumer permission data, that can really provide some really great additional insight into how consumers are being able to balance their finances. And what we see is that in some areas, particularly consumers that don't necessarily have a long history on their credit files, this can be particularly impactful. And in our latest model, VantageScore 4+, we see that in that category, this data has been able to improve the predictiveness of the model by over 6.5%.
Thanks, Rikard. Really important insights and analysis. And that's a wrap for this month's episode of CreditGauge Live. We'll see you next month for those important student loan updates, and we'll see you then.